What's up, people? Welcome back to Invest with T Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So since hitting a peak of nearly $300 last summer, the Tesla stock has been on a downward spiral. The pricing war has compressed margins in Q3 and Q4 last year. As margins shrunk, so did the stock price, which ultimately hit a local bottom earlier this week on Monday with a close of $139.87. For Q1 2024, Tesla lost money. As a matter of fact, you'd have to go back pre-inclusion into the SP 500 and pre-pandemic to find another quarter where Tesla posted negative results. And yet, the stock jumped 13% instantly post-earning on Wednesday and closed the week up a solid 14.44%. Now, why is that? How do you post terrible earning results, but yet the stock price goes up? Well, Elon and team dropped some massive game-changing news during the earning call. That's why. And so in today's video, I'll go over the main takeaways from what was announced, then take a look at the analyst ratings, and I'll close with my personal take on where I now stand as far as buying, holding, or selling. As always, this is not to be taken as financial advice. I am not a financial advisor. This is my personal approach to investing and the thought process behind it. I'd recommend watching all the way through so that you don't miss out on anything pertinent I'll be sharing. Drop the video an ear like if you haven't already and smash that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. It's kind of interesting, right? To find ourselves in this position. The Tesla stock is notorious for dropping post-earning call more often than not, and this is regardless of how great of a quarter they had. So to see the stock jump 13% instantly post-earning and continue trending higher is a bit of a surprise. But this is how great the news actually is. A big reason the stock price has been crashing was the belief that Tesla was no longer bringing to market the entry-level model and was going all in on robotaxi. As it turns out, not only is that not true, but Tesla is actually accelerating bringing the affordable Tesla to market sooner in early 2025. And if that wasn't enough, they also revealed that they plan to introduce a few new models. This is way more than anyone was expecting. The best part, and I quote, "These new vehicles, including more affordable models, will use aspect of the next generation platform as well as aspect of our current platform and will be able to be produced on the same manufacturing lines as our current vehicle lineup." So it's not contingent on any new factory or massive new product line. It'll be made on our current production lines much more efficiently. End of quote. This is major. This is major news, right? And we're only 6 months away from seeing all these new offerings hitting the market. So that's news number one. The second massive piece of news that we received was around robotaxi. Tesla unveiled the first look of their ride-hailing app. They focused a decent amount on the significant step change improvements that they have made with FSD, which is their autonomous software. Like many of you, I've seen videos of people posting their experience with it, but I have to admit that I've been a bit skeptical. The main reason being that 2 years ago I gave it a try when it first became available to the public. My take back then on it was that as an advanced autopilot system that switches lane on the highway and or keeps you in your lane, it did extremely well. It was also capable of handling on and off ramps on the highway, but it did it so slow that the reality is you are better off doing it yourself. Now, fast forward to now, the footage that you're actually seeing on the screen is an in-car video that I took myself of how the system operates today. And I have to say, it is light years away from what it once was. Any doubts that I had about Tesla achieving true level 5 autonomy strictly with their software and vision system is now gone. Like, it's that good. Of course, it's not perfect just yet, but the progress over the last couple of years is astonishing. I mean, you have to try it out for yourself. And personally, after experiencing this latest version, I would say that within 2 to 3 years, they'll deliver on this promise with a system that is more reliable and safe than any human driver. The hype is real. Go try it out. I'm not joking. Go try it out. And so with that in mind, I would highly recommend saving this date, August 8th, right? That's when they'll unveil their dedicated robotaxi platform. The way I see it, this should be an exciting peek into what the true future of electric autonomous mobility will look like. Last, but certainly not least, is the guidance to be able to return to profitability. They stressed in the opening remarks and throughout the earning call that they expect demand in Q2 this year to return and be in better balance with the supply. It's also important to note that despite the negative quarter, Tesla still has a very strong balance sheet, right? They have $26.9 billion in cash and cash equivalents, meaning that they have more than enough to pivot and execute on their strategy. Judging by the stock price reaction, we know that investors loved the news. But what about Wall Street analysts, right? What did they think? The overall consensus rating has not changed since the last time I covered Tesla. It still stands as a hold, but there are some changes in the distribution. We now have 35 ratings instead of 34 with the following breakdown. So that's 8 buy ratings instead of 12, 19 hold ratings instead of 16, and 8 sell ratings instead of 6. This tells us that more analysts believe Tesla to be currently at the right valuation until they deliver on the guidance they just released. Price targets were also adjusted. The high end of the range comes in a bit lower at $310 instead of $345. The low end of the range is also adjusted lower at $22.86 versus $23.53 prior. The average consensus price target saw the biggest drop from $220.98 to now $177.30. After the most recent move, we're only 5.35% away from hitting that target, and that actually makes sense given how Wall Street currently feels about Tesla. So personally, what do I make out of all this? If you know me or have been following my channel for a while, you already know that I'm a Tesla bull, right? But being a Tesla bull doesn't mean that I was blind to the fact that the Tesla stock has fallen out of favor. The last time we spoke, I told you that this rough patch was an opportunity if, like me, your sight was set on where Tesla will be in 2030. Tesla, in my opinion, has won the EV race for this decade. They will further pull away from the competition once they enter the mass market with a more affordable option. This is why the $25,000 Tesla is such a big deal. I said it before, but I'll say it again. Any shares purchased under $200 offers solid upside potential, in my opinion. That's the reason why this week I've added another 5 shares with my buy points at $168.76 and $163.40. In full transparency, I've only just recently resumed buying Tesla in April. I had shifted my focus and capital to the Bitcoin mining stocks while they were getting beat up leading up to the Bitcoin halving, right? I've talked about this on quite a few videos at this point. But now, after experiencing the latest version of the full self-driving software and realizing that Tesla is very likely to unlock true autonomy in the next 2 to 3 years, at which point, keep this in mind, every car in their fleet would become a robotaxi at the flip of a button. That unlock will be like nothing else before it. And here's the interesting thing. Elon mentioned during the call that a major automaker is already in talks with them to license the FSD software. And so, in the same way that almost every car manufacturer has signed up with Tesla to use their supercharger network, the same thing will more than likely happen with FSD. They will all get on that plan because it's easier to simply adopt it versus trying to reinvent the wheel here. So the implication here from a revenue standpoint are ridiculously massive. Having a fleet of autonomous vehicles means that your Uber and Lyft style businesses would be phased out over time. The point is, and really the last thing I will say is this, Tesla is accelerating its pivot to autonomy while still finding a way to bring more affordable vehicles to market sooner than anticipated, right? Those new models will start rolling out in early 2025, all while Cybertruck production just hit a new milestone of over 1,000 units per week. I've said this a few times already, but I believe that we're just now a couple years away from Tesla being undeniably recognized as a technology and AI company. And when that happens, a 5x in the stock price from where we currently are today, well, that will be a conservative valuation, right? And so for this reason, I'm going to keep buying every chance that I get. DCA or dollar cost averaging is my personal plan. The real question is, what is yours? But on that note, that is it for me today. If you found value in my content, click the like button and share with others who you think could also benefit from it. For my newcomers, subscribe. It's free. And don't forget to ring the notification bell so that you too can stay in the know. I'll be back on Sunday for my weekly video and possibly during the week for an extra one. Till then, you can keep up with me here on X, for crypto and NFT related news. Thank you for watching. Stay humble, hustle hard, and I'll see you in the next one.